So you're living in Germany and wondering, how does the tax system actually work? Income tax, church tax, solidarity surcharge. It can feel overwhelming, but don't worry. In this video, I will break it all down in simple terms so you will understand what taxes you pay in Germany, how much gets deducted from your salary, and how to legally save money on your taxes. Let's clear up the confusion and help you feel confident about your finances in Germany. Before we start talking about details, let me briefly explain how the tax system in general works in Germany, okay? Because this is quite complex. You have two tax rates, okay? We have one called the average tax that you need to pay on your income. And then we have the, let's call it frontier tax rate. Average tax rate, frontier tax rate. So what does that mean? Let me explain. So let's say we have an income of 10,000 euros annually gross, and we have an income of 100,000 euros. And in between you might have 50,000 euros, or we can also say you have 200,000 euros income. So I can explain how the government calculates your tax. Everything until, well, 10 is maybe not the perfect example. Let's call it 12. And let's call 50. Okay, I have to do it again. Let's call it not 50, let's call it 68. I will explain why in a minute. And then we still have 200. So if you earn 12,000 euros annually gross, everything is tax-free. Let's do it like this. You have 0% tax. Which also means if you earn 20,000 euros annually gross, 12,000 euros would be tax-free, 8,000 euros would be taxed. If you earn 200,000 euros, 12,000 euros until that income is tax-free, so only 188,000 euros are taxed, okay? If you earn above 68,000 euros, and these calculations are for single in the first place. If you earn more than 68,000 euros annually gross, every euro that you earn more is taxed with 42%. Okay? So also if you earn 100,000, oh, come on. The difference between 68 and 100,000 euros, so 32,000 euros, would be taxed with 42%. This is called frontier tax rate. Okay, if you have reached a certain limit, every euro that you earn more on top will be taxed with 42%. There's also a rumor that it doesn't make sense to earn more money because of taxes. This doesn't make sense because you will always have more money if you need to pay 42%, but you keep 58%. Okay, even if you earn 200, for example. So this is called frontier tax rate. We will come back to that later. Now, if you earn 100,000 euros, you have to pay 0% on 12. On 50, you need to pay 20 something. At 68 onwards, you need to pay 42. So if your annual income is 100,000 euros, your average tax, so the tax that you actually pay, is something around 30%. A bit more, maybe 31 or 32, depends on, but let's call it 30%. Okay? So now if you earn maybe 150, then it might be 35%, just as an example. Okay, I would have to look that up for every specific income level. So we need to understand frontier tax rate and average tax rate. So even if you earn 100,000 euros as a single, you still pay 30% taxes on that income that you actually generate. If you are married, then your household income is considered. So everything would be times 2 if you are married. Okay? So if you earn more than, let's say, 130 roughly as a household income, then every euro more in household income would be taxed with 42%. Why is this now important? Well, let's say You earn 100,000 euros and you pay taxes on that 100,000, and this is your net salary. What could you do now? Well, you could reduce your taxable income. So let's say you have 100,000 euros income. Now we reduce your taxable income with tax-optimized investments. So we reduce your taxable income by, let's say, 10,000 euros. You could do so by investing in real estate or by investing in retirement, for example, or by any other income-related expenses, or sending money back home to support your parents. Many things, okay? So you could save taxes, which means we produce costs, smart investments, to reduce your taxable income. So now your taxable income is 90,000 euros, because this would be fully tax deductible, so considered as costs. Okay? Short example, you buy a laptop for 1,000 euros. So you reduce your taxable income by 1,000 euros, and then times frontier tax rate, let's call it FTR, is the tax refund. Okay? So what have we learned? We have learned if you earn more than 68,000 euros, you need to pay 42% taxes on income. So now we reduce your taxable income by 10, so your new taxable income is 90, so you would receive 10,000 euros times 42%, you would receive 4,200 as a tax refund. Over 10 years, this is roughly 50,000 euros savings in taxes, just because you have invested properly. So it's really important to understand, well, a high tax rate is not only disadvantages if you know how to use it, because if you use it wisely and you produce intelligent tax-optimized investments, because you should build wealth anyways, and you should save money for your retirement anyways, so you don't have to work for your whole life. So if you have to do it anyways, well, then let's save taxes. And if you don't have such a tax-optimized strategy in place, well, you give too much money to the tax office. So what do you prefer, giving the money to the tax office or using the money for your retirement or for any real estate investment? Okay? So this is how it works from income tax perspective. Okay? If you're earning well, you also need to pay so-called solidarity surcharge. It's people in the east of Germany should be supported because Germany was separated. We had east and west. So therefore, there is a solidarity surcharge to bring the east up. Well, it is what it is. You need to pay solidarity surcharge. And church tax, for example, well, you need to decide. I don't want to give you any statement on that. You need to decide if you want to pay church tax or not, okay? But these are most taxes which are applicable for you, I would say, as long as you're an employee. What's also important, let's say, because this is also a common mistake, let's say this is the cost for the laptop, 1,000 euros. Then probably we had roughly 800 euros net plus 19% VAT, value added tax. If you have 19% VAT is not tax deductible typically, so you would only receive the tax refund on the net amount here, okay? This is also important, so when you file taxes, please mention the net amount without VAT, because VAT is not tax deductible. And that's it. If you understand that and you know your frontier tax rate, then you know how much tax refund you receive for any tax deductible expense. Then it's more about planning wisely some tax deductible expenses. Let's call them tax deductible investments. Then you generate tax refunds. Now you could reinvest all the taxes you save. You build up wealth significantly faster to reach all your financial goals. So Germany's tax system can feel complex at first, but once you understand the basics, it becomes much more manageable. Knowing how the system works helps you make smarter decisions and keep more of what you earn. If you found this video helpful, give it a like, subscribe for more expat-friendly financial content, and let me know in the comments, what's the one tax topic in Germany you still find confusing? Thanks for watching and see you in the next one.